Welcome to CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. I'm joined by Robert Smith, founder, chairman, and CEO of Vista Equity Partners, one of the largest software investors in the entire world with over $100 million in assets under management. Mr. Smith is a legend in the tech investing business. Mr. Smith, thank you for joining us to talk about tech, your career, your new book that just came out, leadership, your life, and much more as part of CNBC's coverage of Black Business Month. We really appreciate your time.
Great, thank you, Frank. Good to
and
see
who
you.
better to talk to?
Wow.
Who better to talk to?
Yeah, you, of course. So, yeah, it's excited to be here.
Why don't we start with your book? You just released a book this week. It's called Lead Boldly, that features your insights on 7 principles of Dr. Martin Luther King Jr. So I'm going to read part of this book that you put in actually before the chapter on economic inclusion. You actually ask a question. You say, Dr. King reminds us of our power to make a difference in the communities we care about. How will you embrace that power to create lasting change? I'd like to ask you the same question. How are you embracing your power?
Oh, well, thank you for asking that. And, I'm quite frankly honored not only to be on this show, but when, the King Center and HarperCollins asked me to collaborate. It's a first of a time collaboration where they've done this work, and obviously being honored, 55 years after the death of Martin Luther King, to present some thoughts and reflections on his writings, his works, as they are, represented today, in many respects through my life. I grew up in Denver, Colorado, fourth generation from there, and I lived in part of one of the chapters is about a beloved community, a community that was very focused on bringing, to that community the resources, the know-how, the wherewithal of people in the community to other people in the community. It was a beautiful experience. I call it an expression of love. And as that was impressed upon me as I progressed in my life, progressed in my career, I knew it was incumbent upon me to do the same. And the ability that in terms of what I'm able to manage as a manager of assets in software, over $100 billion in assets, over 91 software companies. Software and technology generally is an enabler. It enables productivity, enables access, enables opportunity, and being able to drive that in different parts of our community. Things like Intern XL, we now have over 30,000 students on that platform and match them up with now over 1,200 corporate partners for internships. And that makes a huge difference in people's lives. Leveraging companies for our Southern Communities Initiative to enable the CDFIs to actually lend more capital with a lower default rate and a higher frequency into communities that don't necessarily have banking infrastructure. Those are just 2 of the areas that I think are critically important that people like me and me in particular can enable because of my knowledge of software, knowledge and capability of the productivity that software brings into different ecosystems.
You were mentioning one part of some of the initiatives you're looking into. It's actually helping minority deposit institutions and community development financial institutions. Why do you think it's important for you to put your resources towards those? What do you think that enables? Because going back to the book, Lead Boldly, a lot of people don't talk about this very often, but part of Dr. King's message, it wasn't just social justice, it was economic justice.
It was. A lot of it was underpinned with economic justice. And people have to understand that the stronger communities in America make a stronger America. And what really drives opportunity in this country typically is access to capital and utilization of capital to build businesses, to create jobs, to create stability, to improve what I'll call the conditions of the communities that people live in. If you don't have access to capital, you can't necessarily improve your homes that you can then borrow against to fund your businesses. So in many cases, over 70% of the African American community actually does not have a branch bank present in that community. In the community I grew up in, there wasn't one. Wow. In fact, we didn't have a supermarket either, right? And so as a result of that, the small business owners in my neighborhood didn't have access to capital so that they could actually grow their businesses and then hire more people. Everyone knows that in America, the vast majority of companies or employers are small to medium businesses. So all of those are important components of being and participating in enabling these community development banks and minority depository institutions to lend more capital at a higher frequency.
Right. Again, name of the book's Lead Boldly. Really interesting read. I'm going to finish it. As I admitted to you, I'm about halfway through.
Good.
I wanted to go through a couple different parts before we spoke.
Sure.
I want to talk about your journey as a leader. So of course you're the leader of Vista Equity Partners. You're the chairman, the CEO, and the founder. But also before that, you were just kind of a leader of yourself. Out in Goldman Sachs San Francisco office, you were the first person really focused on tech M&A. So how did you become a leader? What are the things in your life that led to you being a leader?
Yeah, following great leaders. I had the great fortune in some respects, first growing up in my household. and to see my father as a leader of the community. And while he was a teacher and a principal, he also was, chairman of the local YMCA. He was chairman of it was called North City Park Civic Association, and he associated himself with community leaders, and some were in government and some were in private industry, in ways that they could actually create real change in our neighborhoods. So when you see that as an example, you realize that's frankly part of your responsibility as you grow and build your skills and build your capabilities. So that's something that was an early impression on me. So as I matriculated and I went to great institutions like Goldman Sachs and saw spectacular leaders there and saw how they not only led in terms of the transactions that they did, but actually led their teams and teach and trained and mentored their teams so their teams would be more effective and be able to be leaders in call it the league tables as we call it. So all of those things are just, a whole series of events that, like as Dr. King says, build upon who you become as a person and drive ultimately your leadership style. So those are important aspects of my upbringing and my rearing, I'll say, that led to me being the leader that I am today.
Do you have a philosophy when it comes to leading that's kind of overarching over everything, or do you lead in different situations in different ways?
You have to lead in different situations different ways. And and the world that we're in, for instance, in technology, it is constantly changing. And so one of the ways that we have to lead is to think about how we embrace new technology into our best practices to enable our companies, our CEOs, to become more effective. One of the more recent things we're doing, of course, is we've now built I'll call it an agentic factory with a very large partner being Microsoft, and saying, okay, how do we take these enterprise software companies? In the early days, we were taking on-premise software companies. We built a factory to convert them to become, in essence, what we call cloud or cloud native or SaaS companies. We did, I think, more of those conversions, and I think really any institution on the planet. Well, now that there's this new technology called, Gen AI, we've been investing in AI for, over a decade. But now, how do you take these companies, these cloud native companies in some case, or hosted companies, and make them agentic? And so building a factory is what we've done, and now we're driving companies through that. So in that case, you actually have to understand the technology and lead by example and building capability and resources. So you can actually drive and enable your portfolio company executives to see how it's done and give them tools and resources and partnerships to be effective in that challenge.
Now, you've said agentic AI is going to be a differentiator, and some companies are going to have the right to exist because they use it correctly, and others are just going to go by the wayside. Do you still feel that same way? You said that a couple months ago. And when you're looking at companies right now and their use of agentic AI, do you believe they are using it effectively? Are you starting to see that difference between the companies that are going to make it because they've figured out how to use it and those that aren't going to make it because they don't?
What we are seeing is, I like to say enterprise software, consumer software is a little different, will ultimately end up in those three states. Agentic, I call it rule of 70, 40 is the new 70, or no right to exist. And part of that is, do you have sovereignty and dominion around workflows and data sets? And then can you actually create agentic engines as part of the delivery of a product or solution to your customer base? What we're finding now that we've gotten, again, the first company through the factory, and now we have dozens more now moving through it, is a few things and some great insights. AI is going to feed enterprise software into these states. What it's really going to do, though, is start to attack what I'll call the services industries, because the capability, you go from a license to building a team of workers, agentic workers that have a high productivity. Enterprise software already is over 625% ROI on the purchase of it. We're actually seeing inflections of exponential proportions of the productivity that agentic solutions can deliver into an enterprise. And so those are real actual things that we are experiencing with companies today, our companies today, as we install these systems in their customers.
Well, that leads me to my next question. So if you're using it in your portfolio companies, you must be using it just here at Vista.
We use it everywhere.
Right. So I have to ask, has AI changed the way that you value companies, the way that you look at software, the way that you invest, the companies that you want to invest in, as opposed to the companies that agentic AI says you should invest in? I mean, what's the difference?
Yes, it changes it insofar as you now can understand what you can change in a business. If you have a business operating with a certain margin, certain growth profile, and say, okay, I'm going to bring the agentic solution to code development. it can reduce the cost of that code development. It is highly effective in new code, not as effective in what I'll call legacy code. But we found what the proper benchmarks are so we can actually drive against that in terms of our annual operating plans. You can use it for customer support. You know exactly what sort of deflection rates you can cause and reduction in cost in customer support. For go-to-market, so all the P&L aspects of running a software company, we now are applying some form of generative AI solution set, and now actually have specific KPIs that we can measure against and actually manage towards to reduce the cost of the product. And in the agentic solution, in terms of the value that it brings to our customers, the key now is how to price against that. If we're deflecting, tens of millions of dollars, or in some cases maybe hundreds of millions of dollars in costs for our customers, how do we capture our fair share with our agentic solution? So that's the real challenge today.
All right, so that's the challenge right now. So I do have to ask, how come we haven't seen big changes in the portfolio? I mean, so agentic AI sees things the way you see it? Because these are the companies that you and your team thought should be in the portfolio. Agentic AI hasn't said, no, this one has to go, or this one should be in.
It is more complex than the words. Okay, because you have series of agents that actually perform the tasks, and then you actually have to now build a whole series of administrative agents to manage and monitor those agents in ways that they are actually giving you and producing solutions at a high precision. Enterprise is very different than consumer. Okay, in the consumer, you and I can deal with a certain level of tolerance of hallucinations, as to how it's characterized in a consumer. In the enterprise, we can't have that fuzziness of answer. Okay, and those randomness of outcomes, because you would be upset if it gave you a 95% probability that your wire transfer goes to you, and a 5% probability it goes where this agent might think it may be a good place. Right?
I think I would.
Yeah. Okay. But in a consumer context, you're probably a little more indifferent about this restaurant versus that one, and you're okay with that. Call it that fuzzy answer. But in an enterprise, you need a lot more precision in it, and so you actually have to build and construct the infrastructure with a higher degree of certainty of outcome.
Just about everybody I talk to says hallucinations, even in enterprise AI applications, are still a very real thing. We see it sometimes. In the consumer side, but also on the business side, where maybe it's Alphabet's Gemini system doesn't quite work the way it should, or we see it with Grok coming up with answers that I don't think Elon Musk wants it to come up with. I would assume. I'm going to assume they don't. When do we get to the point where that's no longer a problem? And is it simply a matter of building up what you seem to be calling like an army of different agents to monitor different things, or is there just a timeline where we get rid of those hallucinations?
In the enterprise, part of what we do is we constrain what are the outcomes ultimately for things like underwriting an insurance claim or an insurance policy, or managing a loan syndication. You actually know what the likely and probable outcomes should be, and you can actually eliminate in some respects things that aren't probabilistically true. So that's a function of the architecture. That's a function of the way you actually build out the capacity of your agentic solution. That's why the enterprise is so different. So now the installation of those and the configuration of these agents' activities in the enterprise is what we are doing today. So it's not going to be a mass proliferation, but as it proliferates, it creates massive implications in terms of the value that these agents bring to the customers we serve. So it is occurring. It's just, as it occurs, you actually have to get it exactly right as the kind of close. And so that's what we're focused on.
All right, there is a mass proliferation of AI infrastructure. People are just building it up. I mean, seeing billions in spending announcements in just a couple last months. Also big spending plans, whether it's Alphabet, Microsoft saying they're going to spend way more than people thought they were. I'm going to add some other names. Meta, CoreWeave, just to name a few. How does all this spending on infrastructure shape your view of software?
So again, for us, we will need the inference capabilities of what these models deliver. But in the enterprise, again, it will be, my view, I think ultimately will be compute more at the edge, okay? Because there's only so many ways you're going to underwrite a certain, activity, which might be, an insurance claim. It's only so many outcomes. So you actually don't need, call it the power that a lot of these models deliver. All right, in that environment. You might need it for other applications, might be diagnostics, or the development of a new drug. That's a different use case than the sort of use cases that we use. So we actually think we're going to be mass beneficiaries of the mass proliferation of that compute, because that compute cost will come down pretty dramatically. And then as you actually build out capabilities at the edge, we think we're going to even gather more economic opportunity in that context. Again, the enterprise is very different than consumer, and depending upon the use case as to how much of this compute power do you need. And at the edge, of course, typically it's going to be lower power consumption, lower cost, and higher frequency, lower latency in terms of the work that you need for those particular applications.
So with that thought in mind, is the AI infrastructure build-up just getting to be too much? There's some people that believe it's just becoming too much. Other people say they're going to keep building because they feel like the demand and the capacity are going to meet sometime in the very near future. In your mind, I want a real answer out of you on this one.
Yeah.
Is the AI infrastructure build-out, is it becoming too much? Are companies, in your mind, spending too much on data centers? Are they spending too much on chips, spending too much money to try to get chips that haven't even been made yet to book them in the future?
It's hard to say that question of too much. There is.
What can you say though?
Again, I don't think all the math is completely done. Okay, because again, I said I don't think there's enough calculus on how the enterprise will be affected ultimately, because I think you can actually deliver a lot of the compute in a much smaller format at a much lower cost with much less power consumption. Ultimately. Now,
so then that leads me to think you think the build-out's getting ahead of itself.
That's for the enterprise. There are other aspects in terms of how this is going to be used that may exceed that demand of current capacity, which might be, we may decide that it's important for us to have, certain experiences that only AI can deliver, to a consumer market that they're willing to pay for. So again, it depends on what assumptions. If you're thinking about consumer assumptions, I live in a world of the enterprise, and I have a good sense for what compute is required for the businesses that we own today.
Well, in all fairness, a lot of this build out is focused on enterprise functions, especially with the companies I named, whether it's an Alphabet, a Microsoft, or CoreWeave. That's really focused on enterprise functions. And also, I want to go back to what you said. You have a bunch of agents.
Yeah, well, they are enterprises, but a lot of their functions are doing are that capacity is for consumer activities. They're not necessarily driving consumption and saying, oh, this is going to be used for insurance, it's going to be used for automotive, okay, specifically. They're saying in other aspects of the business, that it will be used more frequently.
All right, but just going back to your agents. Mm-hmm. But your agents are telling you, on the edge, low latency, less power, that's where it's going to go.
Yeah, in our space, for sure.
All right, I want to go to your companies. Mm-hmm. What companies in your portfolio are you excited about? What companies do you see taking advantage of agentic AI or having the best ability to take advantage of agentic AI in the near future?
Yeah, so things, companies like Gainsight, companies like Avalara, companies like SalesLoft, these are all businesses that as you agentify the solution set, they bring massive return on investment for their customer base. And so not surprisingly, companies like Resolink, companies like Gnosis Freight, these are businesses that because of how they sit in their ecosystem, agentic solutions provide, again, kind of a massive return on investment for their customers. And now the question in our mind is how do we capture our fair share of that economic rent that's created from the highly efficient agentic solutions that we're delivering to our customer base.
So with those companies in your portfolio, are they going to stay in your portfolio with them now being agentic AI powered? Are you going to possibly look to put them in the public markets? Because according to your thesis, they're going to have an advantage over a lot of their competitors.
Yeah, it depends. Certain ones will go public. Certain ones will, we will find wonderful trade sales. Others will put in like a continuation vehicle like, CSG, Cloud Software Group. I mean, those are businesses that have unique positions in their environment. CSG, of course, is the virtual machine dynamic. If you think about a world where agents have to live somewhere, living in a virtual machine is actually a good place for them to live. So we think that's actually one of those businesses that, built properly, configured appropriately with the right partners, can actually have a very, long tail of opportunity associated with it.
So take us basically around the corner to give us an insight into what's going to happen that we can't just see in a straight line. You take a lot of companies private. Mm-hmm. Are there any sectors or areas in the world of tech right now that you're really focused on that you think are undervalued and there's a lot of opportunity to take them private, infuse them with agentic AI, and then either keep them in portfolio or again, turn them public?
And I tell you that, and then the prices go up, and then I can't buy it, Frank. That's a bad question to ask me. Again, what we think about in our underwriting is, okay, what are the things, we call them critical factors for success under our control. We have a whole new set of knowledge and capacity because how we have built out this agentic factory that enables us to underwrite differently than we did even 6 months ago. And so that's what we're applying in our analysis. And these are the businesses that operate this sort of margin. You create an agentic solution, it operates at this sort of a margin. Mm-hmm. If you're actually able to reduce costs in the production, it operates at this sort of a margin, and it actually has sustainable infrastructure or moats around it that are protected from I'll call it, agentic solutions attacking that industry particularly. So that's the new insights that we're bringing forward in our underwriting.
All right, if I can't ask you directly, let me ask you about some different areas. Cybersecurity. We see a deal pending. Palo Alto Networks looking to buy CyberArk. A lot of people talked about an increased need for cybersecurity in the AI world because not only would companies have AI, so would potential hackers or other threat actors out there. So what's your view on cybersecurity right now, which in the public markets has actually underperformed in recent months, surprisingly?
It's interesting. You and I as individuals have what I call a surface area of attack that all these wonderful cybersecurity companies know before, like one of our companies, to protect. As you and I start to manage agents, not surprisingly, the surface area starts to increase exponentially. And so you've got to think about how do you protect them? Do you protect individual agents, or do you protect the environments in which these agents live? Okay, virtual machines are great places for those agents to live, and in protecting those, you have the ability in many cases to keep the same level of call it attack surface area and manage that in a way that as you proliferate agents, it actually doesn't proliferate the amount of, call it the attack vectors that then could be exploited.
Interesting. Another part, energy. A lot of talk about nuclear energy possibly powering these data centers, just the need for energy in general, and also energy prices moving higher. What's just your view on stocks or companies, that aren't necessarily stocks, focus specifically on energy, providing energy and also infrastructure for data centers and also empowering AI?
Yeah, energy, again, you've got generation, you've got transmission, you've got distribution, you've got utilization, and that's the complex factors that go into that question. And if you look at the current assumptions that we've looked at, there's going to be a massive demand for it if we continue to build out, not in all aspects of that. Of course, now you're seeing people say, I'm going to put data centers right next to energy. We're, of course, looking for more efficient ways to generate power and energy to support this. But at some point in time, if you actually believe the thesis that a lot of the compute will be done at the edge with a fraction of the power consumption, which it can be in some cases, you're going to go through that same sort of an overbuild cycle. So we'll have to see who's right there, but that's a dynamic that we think ultimately there's going to be, that dynamic is going to come into play as to what the energy consumption will be.
So just to be clear, data center build out, not clear, too soon to tell, but you're saying it seems like we might be on the precipice of an energy build out that's going a bit too far because you think the direction is moving towards the
energy build out. Again, our transmission and distribution systems actually can use some augmentation in any respect. Do you need the generative power right now based on calculations? Yes, but ultimately you might not if you actually have different forms of compute that have a fraction of the consumption to deliver the inference capabilities.
All right, text your wheelhouse, but people just want to hear your general views on investing. So I know you watch CNBC. We have Rick Reeder on our air. Come on, you watch. We have Rick Reeder on our air. He said this is one of the best investment environments maybe ever, but certainly in recent years. He was largely talking about public equities, public bonds. I want to get your take, whether it's public equities, public bonds, just in general. How are you looking at the investment environment?
The investment environment creates opportunity because now of what I'll call the volatility. There are a lot of things changing all at once. And so being able to participate in that is how you can actually make money. You introduce a new technology, in this case, Gen AI. Guess what? It's going to affect every single industry. It is a general purpose technology, like electricity, right? So it is going to affect every single industry in one way, shape, form, or another. And so what you have to do as an investor is to think about where is there an arbitrage of opportunity, and where can you create an arbitrage of opportunity if you're investors like us who are value, and we bring a value creation dynamic to it. That's how we think about it. And so when we look at the different sectors, still believe enterprise software, if you have the sovereignty, dominion, workflows, and data sets, is a wonderful sector to enable that enterprise software to become agentic, because it actually delivers solutions that have massive implications on the services sector. You need fewer and fewer services capabilities in terms of people doing that work, that you can actually inure to the benefit of those who are utilizing that technology.
So it sounds like you agree, but you're saying because of the volatility. The volatility is creating opportunities.
Volatility really just being the change, okay?
Right.
New changes in markets. Of course, we've got tariffs. We've got all sorts of changes in the equilibrium systems that we lived in 2 years ago and 3 years ago. Anytime there are those sort of new introductions of changes, that's when you can actually start to look for opportunity sets.
All right, so also a couple months ago, you said things are kind of expensive right now. So with that thesis in mind, and you say, it seems like you're agreeing with Rick Reeder, it's a pretty attractive environment to invest right now. Are you thinking about putting some money to work? We know Warren Buffett, or at least Berkshire Hathaway, is putting about $5 billion. Not a lot of money to them. They have about $348 billion.
Yeah.
But still, looking to put about $5 billion to work, possibly in an industrial. Are you looking to put some money to work actively right now?
So if you look at the world that we live in, there has been a massive deflation of the prices of the companies that we typically buy. Okay, in 2021, 2022, some of these companies were trading at 17, 18, 20 times. They're now trading closer to 7 and 8 times. So it's a great opportunity, which is why you've been seeing us doing a very consistent set of acquisitions and a consistent set of realizations across our portfolio. So we've actually maintained the same sort of a balance, and we're looking now to continue to be aggressive in our acquisition environment to go after companies that we think now can become agentic in our world.
All right. We're almost out of time, but I do have to ask you just more broadly about the public markets. I know
Sure.
the private markets are your wheelhouse, but as you look at the public markets, the S&P and the NASDAQ, coming off record highs, 17th and 20th respectively for the year, what's your view on public equities from now into the end of the year? Also the fact that we're not really clear on what the Fed's going to do. Seems to be a lot of confidence that the Fed cuts coming up in September.
Right.
That's where we started the year. We started the year with a lot of
who knows?
confidence.
Right. Yeah.
So just your view on the public markets overall from now to the end of the year.
Again, a lot of the indices are weighted to just a few stocks as opposed to, general market, call it perspectives. And so like all investors, you can look at those that are, have outdo influence on those indices. Or you look at those ones that actually aren't being affected, that people do not understand in terms of how agentic solutions are going to improve their margins or improve their market conditions. So I think, is it a good time to invest? Absolutely. We'll see what happens in the bond market, over the next really couple of weeks is my sense.
Right.
But we have found in our markets, in again, private markets, in fixed income, that there are a lot of software companies, there are a lot of businesses, because the VCs have now gone and invested in AI companies, that these great companies actually need capital. So our credit business is actually going through a pretty interesting boom.
All right, so it sounds like you're saying it's a good time to invest in the public markets. I want to be clear, because a lot of our viewers also can invest in the private markets as well. Do you see the public and private markets as being equally as attractive?
It's hard to say. Again, when we invest in the public markets, it's to take them private. So that's how we think of it. Right. We think there's an opportunity set then to perform some operational transformation and then drive them to a higher value.
Your story is amazing, simply
thanks,
amazing. Frank. Coming from Denver, going to school, you're an engineer. You're an engineer. Nobody, I'm sure you didn't even think about getting to this point, or maybe you did. Maybe that's how you get here. Can I ask you just a broad question for
Sure.
more of our broad audience? What's the biggest money mistake you ever made, and what's the biggest correct money decision that you ever made?
Yeah, that's it. So when I think about things that have gone well, listening to I'll call mentors. Building on my own capability, betting on myself, and understanding that if you're skilled, you believe in your capabilities, and you start an arbitrage, that you actually go put capital, resources, and of course your energy and intention behind them. Those are the things I think about from a positive side. Things that you always have to correct. You always have to think about people and personnel, and is this the right industry? And certain times you will invest in a business and we're like, oh man, that one didn't work out because something changed, or we missed something.
Right.
But fortunately, that hasn't happened all that often. But those are the things I think about every day. So it's the key is, I think, just having a view of continuous improvement and having a system that embraces continuous improvement as a core tenet, and not just something you do once a mistake is made. So that's how I think about it.
That's actually business. I mean, just you personally. Like,
Yeah.
what's your big? Do you have a money mistake that you've ever made?
Nah, I wouldn't. I don't know. No? The good news is I have ADHD on that sort of stuff, so I forget about it.
Are you optimistic? Just looking forward. I don't know if it's a year from now, just going forward. Just your general view on what's going on in the United States and the world with a lot of these changes that you were just talking about.
Yeah, I'm very optimistic, actually. I think these new technologies create new opportunities. Of course, there's going to be some creative disruption in some cases on things that we thought would last forever. But I see the productivity now in the work that we've done, the factory that we've built, or the products that our companies are now able to deliver for their customer sets. And I've never seen this sort of, kind of return dynamic. And now, proof of the pudding is always in the eating. So you have to now go get these things, done, not just done, right? And get them installed, and then demonstrate the value to the customer base. So I'm very optimistic about that.
That's a great place to leave things.
Yeah,
Robert
thanks.
Smith, founder, chairman, and CEO of Vista Equity Partners.
Thank you.
Thank you for
It's a
your
pleasure.
time. It's always a pleasure. And thank all of you for watching CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange.